Good afternoon, Quasar Markets Live. You've got your host, Howard Greenberg, here with Dr. Ellman, the president of the Blue Collar Investor Corp. How are you doing today, Alan?
Doing great today, Howard. Glad to be with you.
Glad to have you. And, I'm excited. I've been telling everybody I'm trying to orange pill you here. We are going to talk about my favorite subject today, using Bitcoin maybe in a covered call and how we can do that.
Yeah, actually, you had mentioned an ETF, Ibit, to me,
Yep.
and so many of our members have been asking me, can we use cryptocurrency in our option portfolios? Well, as you know better than most, Howard, most of the securities involving crypto have a very high implied volatility.
Absolutely.
And covered call writing and selling cash secured puts are low risk option selling strategies. So they don't seem to mix. However, one of the great things about covered call writing and cash secured puts is that we can actually craft these trades to make them low risk, even with a high implied volatility security. So, because so many of our members have asked me about it, and because you've shared with me one of your favorite exchange traded funds is IBIT, related to Bitcoin, I said, let me sit down and figure this out and see how we can craft trading crypto, specifically IBIT, with covered calls and cash secured puts. And in today's discussion, we're going to focus in on a low risk cash secured put trade that I actually executed on Monday, a 5-day trade that expires 4 p.m. Eastern time today, Friday the 14th.
This is perfect timing for it. I love it. As you know, my passion for it. Those that don't know, Ibit is BlackRock's ETF. It is the most liquid of all of the ETFs out there that come to Bitcoin. And I even went so far and changed my background. I don't know if you noticed today for you.
I think people, by the way, Howard, can figure out where we are based on what you're wearing.
Yeah. Yeah. One of us is in Florida. One of us is in Ohio. Try to guess which one is which. The man
Right.
with a tan and a short sleeve shirt, or the white pasty guy at the top and with a sweatshirt on.
Exactly. Well, you're welcome to come down visit us anytime, Howard.
Awesome. I will take you up on that.
Okay, so uh, one of the most well-known forms of crypto is Bitcoin. And by the way, if you're the expert in crypto, so and I'm not, but I did figure out a way to leverage IBIT with covered calls and cash secured puts. So if you have any additional information for your
Yeah, I
viewers,
guess I should tell them why I brought it to you and why I was interested in it. What I wanted to look for is a way to acquire Bitcoin in my self-directed IRA. And Dr. Ellman talks often about that he does most of his trading of this stuff in self-directed IRAs. And it's a way to avoid capital gains taxes and to sort of kick that can down the road with taxes a little bit. So I was really interested at maybe looking at a way to do that. So I had mentioned to him, my concern with it is trying to use his exit strategies successfully to avoid getting my shares assigned. That's the fear I have, the fear I think that you brought to me also because of, the volatility in that you have to be very careful to manage it. But that was the way that I really wanted to look at it. I am a long-term believer in Bitcoin. I'm one of those people that DCAs it. I buy a little bit, every month, and I just put it away and I don't really think about it. So that was why I wanted to talk about it in this way. And like you said, there are so many people, I'll point out that Ibit became bigger than the gold GLD within the first month of being in existence. That's a huge deal to have the liquidity and volume. And you brought up to me how important that is, right? Having strong liquidity in the option market. And they're one of the best for it, I felt.
oh yeah, well, when there is strong liquidity, that means that the bid-ask spreads are going to be very tight, which gives us more favorable trade executions. So that goes across the board. You always should have adequate, number one, stock or ETF liquidity, and number two, option liquidity when you're doing these kind of trades. Now, when you're accumulating IBIT and you don't want it assigned, then there's a little bit different way of doing it than we're going to be talking about today with cash secured puts. That's called portfolio overriding. I don't recall if we did a session
We
on that?
have. It's actually your #2 trending video on Quasar with over 4,000 views. So
Okay.
make sure you get in there and take a look at that. We have gone over portfolio overriding.
Okay, so in that presentation, I'm certain that I shared how to avoid, not with
Yep.
100% certainty, but you can get up to 95% certainty that exercise will not occur. Now, even if an option is expiring in the money, which means will be exercised, you can always buy back that option.
And
So
that's, yeah,
as long
that
as
was
you
what I
don't,
was going to say is I guess I also don't want to scare people, because in the right circumstance, if Bitcoin does one of those $20,000 jumps in a day, I'll have no problem taking that profit to the bank, having someone take away my shares, because I'll immediately go back in on the next dip and get back in. So I do want to say that to people that might use this as their sort of guideline for what they're going to do in trying to follow me. Keep in mind that I will do that. While I'm tied to the one stock, and my sort of philosophy around it is going to be based Bitcoin generally, not other stocks right now, I will go in and out of it if something like that moves.
yeah, another thing that your viewers might be interested in is if they're interested in accumulating Bitcoin or Ibit in this particular case at a discounted price. Now, there's
Absolutely.
ways of doing that, and I will point that out in one of the slides. I know there's some information in the calculations where I could show you how there are two possible outcomes with these trades. One is you're generating cash flow, and the other one is you're buying the security at a significant discounted price.
Absolutely. I saw that in the presentation. That's what has me so excited to get this started, quite frankly, is exactly that. Is if Bitcoin just stays up, then I just make money off the premiums until it doesn't.
Right. That's when I say, look, you either generate cash flow, buy the security at a discount, generate so on and so forth. That makes it sound like a panacea. However, any trade you make where the price of the underlying drops below the break-even point is where you start losing money. And that's when your exit strategy arsenal must kick in. So these aren't no-risk trades, they're low-risk trades.
Right.
So,
Absolutely. There isn't a trade out there that is a no risk trade. The closest would be buying US treasuries.
right, and yeah, right, and there you're willing to accept risk-free returns, but folks like us and probably all of your viewers are looking to beat risk-free returns, and therefore, by definition, they're willing to incur a certain level of risk, and that will differ from investor to investor.
Yeah.
So again,
Absolutely.
we're back to Ibit is an exchange traded fund, and it's a way of trading Bitcoin without actually directly doing it peer to peer or via a digital asset exchange. So it's a very easy way for retail investors or all investors really to get involved with Bitcoin. Very, very easy. It's got great liquidity, as you pointed out before. But the thing about anything related to crypto is its high implied volatility. So when
Yeah.
we're constructing a trade, if we are in fact low risk tolerance investors, which is where I reside, then the trade has to be crafted in a certain specific way where the risk is low. It's not no, but it's low, but the returns can still be significant. That's what we could do with a high implied volatility security like Ibit. Gives us that flexibility.
Yep. And like you said, there's always going to be risk involved with any trade. So you need to know that. And then when it comes to when he's talking about the implied volatility, it's usually about 3x the implied volatility of what you see even in the QQQ NASDAQ. So just keep that in mind for when you're wondering there, what is that volatility like? It's usually about 3x that.
Okay, so on this Monday, this is a trade that actually executed in one of my portfolios. This is an option chain, Howard, from cboe.com. Most of your viewers will be using option chains from their own brokerage account. And I'm sure there's a whole range of brokerage accounts that your viewers use. So I use a free site, cboe.com, very reliable, very accurate. And I highlighted for you and your viewers all the information we need to then do our initial trade calculation. So here we go. You
Awesome.
see the expiration is Friday the 14th today. at 4 p.m. Eastern time. At the time that I executed this trade, Ibit was trading at 55. Now, I don't know if you could see what it's traded for at this moment, but right before we started our discussion, it was right around a little bit higher than 55.
Yeah, it was
So,
55 and change. 55.29 was the last price I saw.
okay, so unless Ibit drops $5.29 by 4 o'clock today, this will be labeled a very successful trade. Okay.
And I will point out that would mean a 10% drop basically in the price of Bitcoin here. So you'd be looking at a $10,000 drop in the price of Bitcoin to have that relative move in Ibit.
Okay, so that's highly unlikely.
Yeah.
But that's where we are right now, about a little past 11 a.m. Eastern time. So now let's take a look at the option chain where I highlighted certain things for your viewers. Let's start with the red arrow on the right side there. That's the open interest, over 3,000 contracts of open interest. In the BCI methodology, we require, the guideline is 100 contracts of open interest and or a bid-ask spread of 30 cents or less. So you could see this has very, very robust liquidity, which means that the bid-ask spread is going to be very tight. Well, let's take a look. The bid price is 32 cents. That's what I generated when I executed this trade. The ask price is 34 cents, a 2-cent spread. That's almost unheard of. And that's because of the huge liquidity offered by a security like Ibit. So it's got great liquidity. It's got a perfect bid-ask spread for favorable trade executions. Now I'm referencing that 50 strike. Now for puts, an out-of-the-money strike is lower than current market value. So keep this in mind. On Monday, Ibit is trading at 55.
Yeah.
My risk is Ibit dropping from 55 to below 50. When I say risk, that's defined as the possibility of exercise where the shares are in fact put to me at $50. So like an example of some egregious outcome, what if Ibit drops to 45 and I'm forced to buy it at 50 because of my cash secured put contract obligation? Well, I'm losing $5 a share. But what is the actual probability of Ibit dropping below the 50 strike? That information is in the option chain, Howard.
Right.
It's in the option chain. Take a look at the cell I highlighted in blue. Now, this goes back to what we discussed in our last session when we talked about the option Greeks. One of the definitions, remember there were 3 definitions of delta. One of those definitions is the approximate probability of the option expiring in the money. In this case, Ibit going from 55 to below 50. What is the approximate probability of that happening? And the algorithms show that it's about 14.4%, meaning that the probability of a successful trade, not having to do any exit strategies to avoid exercise or not having those shares exercised and put to us, is over 85% probability of success.
Right.
Now, this is the kind of trade which I would call low risk trade, because it's an over 85% probability of success. Now, I want your viewers to also keep in mind that if Ibit does in fact drop below 50 in that 14.4% range, you can always buy back the option if you don't want to take possession of the shares.
Sure. Absolutely.
Anytime before 4 p.m. Eastern time today on Friday, the 14th. So that's that. Now, one other cell I want to that I highlighted that I'd like your viewers to look at, and it's something you just talked about before, and that's the implied volatility, IV, in the pink cell. And you could see that right now the implied volatility as of Monday was 60%. So that means based on current prices in the marketplace, Ibit is expected to go up or down by 60% over the next 1 year based on one standard deviation. So it's expected to fall into that range 68% of the time. That's what that means. And because the implied volatility is 60, what is it for the S&P? About 13 to 15 right now.
Yeah.
That would give your viewers, oh, it's like 4 times the S&P. So that's why we have so much flexibility with these trades. The only question now, because based on the option chain, everything looks great. What kind of returns can we get using the 50 cash secured put strike, 1 week, 5-day trade? What kind of returns can we get? And that's probably in the next slide, if I recall.
Absolutely is.
Okay, so I've probably shown my trade management calculator.
Yes, you
Just about every single time. I can't be without it. So, I don't know how I did it, but I've been doing this for 30 years. For 27 of those years, I didn't have it. The last 3 years, I've had it, and I know I can't be without it. But in any case, let me just review with you and your viewers. The top row represents the trade entry. So you see Ibit trading at 55 right in the middle there in the blue cells. And the strike price is the out of the money 50 put strike, which generated a bid price of 32. Remember, the spread was 32 to 34.
Yeah.
Now, in this particular trade, 500 shares. Now, keep in mind, you don't buy the shares with a put. For a covered call, yes, you buy the shares and you write the call. For puts, you don't actually buy the shares. They're cash secured. So what does that mean? That means the broker, since you're undertaking the contractual obligation to buy the shares at 50, the broker will require us to put that cash into our cash account to be there in case the option is exercised and the shares are put to us. So the formula for how much cash we have to set aside is the put strike 50 minus the put premium 32 cents times 500. You can see in the blue cell at the bottom, that's 49. I'm having trouble reading that. It looks like
49.68. 49.68.
49.68. So that's how much cash you have to set aside to secure that put trade. All right. So you're not buying the shares, but you're setting aside a certain amount of cash into your broker account. Now, in the bottom row, Howard, is the actual calculations executed by the spreadsheet. Tells us in the red circle all the way to the bottom left, 5-day trade, Monday to Friday, 10 to the 14th, period. That's the 5-day trade. Now, in the yellow cell, it gives you your break-even price point, right? Which is 49.68, 50 minus 32 cents. Remember, Ibit trading at 55. So if it drops below that break-even price point, we start losing money. Didn't happen, okay? Because it's a little above 55 with a couple of hours to go today. So now the brown cells are the actual meat and potatoes of this spreadsheet. And it tells us that the 32 cents, because, 32 cents sounds like, well, that's no big deal, 32 cents. But everything must be looked at through the eyes of percentages.
Absolutely.
So the 32 cents, based on the amount that we set aside, comes to a return of 0.64%, and on a 5-day trade, 47% annualized. So all of a sudden, we could see that it is a very significant return, though it was crafted in a low-risk manner. So one more cell to look at, Howard, and this actually goes back a little bit to your discussion before about accumulating Bitcoin or Ibit over the long haul. So this is probably something that would be of interest to you and anybody else, any of your other viewers thinking along those same lines. Have a look at the purple cell on the bottom right. That's 9.67% discount if Ibit is purchased as a result of exercise. In other words, Ibit goes from 55 on Monday to below the 50 strike on Friday. We take no action to buy back the option and we allow exercise. Shares are put to us at the break-even price point of 49.68, which represents a 9.67% discount from when the trade was entered when Ibit was $55. So
absolutely. And if you asked me any day, would I be willing to wait till Friday if I could have a 10% discount on Bitcoin? I would say yes.
Okay. And if it doesn't happen, then you've generated a trade that has an annualized return of 47%.
Yeah, absolutely. If that's my worst case scenario, I like that.
Yeah, again, I don't want to
Yeah,
frame
you can't tell. It's not risk free because you're going to own those shares, and like you said, Bitcoin with implied volatility of 0.6. You could wake up and it's at 80,000, and
right.
then
So let's say, for example, Howard, that you want to buy Bitcoin. You feel that maybe today it's a little bit high, but I'm willing to buy it 10% lower. If it drops 10% lower, I'll buy it. Now, you could wait for that to happen, may or may not happen. You could wait, well, or you could say, you know what? I'm going to sell a cash secured put that, if exercised, will generate those shares coming to me at a 10% discount. And if that doesn't happen, I'm going to get paid not to buy more Ibit.
Yeah. It gives me more for the week after to buy more. You know what I mean?
Right.
Is it's earning money that I can put towards that eventual purchase. Yeah, like you said, the biggest worry is that if you think there's some sort of black swan event in this case, because it was going to take a pretty big drop to go much past your price, then you would be worried about it. But based on it, I do have a question. Where I don't know if it mitigates that issue so much. Would you ever take assignment of the put before the time frame was over if it hit that price, so that you could start to then sell cash, sell calls against it?
Well, it's not up to you.
Oh, it's up to them on that side. Okay.
Yeah,
Oh, yeah, that's right. I'm the buyer.
yeah. The
I forgot.
exercise.
I forgot I wasn't the seller.
Yeah, and early exercise, Howard, is very, very, very rare. I mean, we can go through the math one day on that, but it almost never early, even if an option is deep in the money, it almost never pays for the option buyer to exercise early. It almost
Right, because
never.
it's going to continue to go up in price.
Well, there is on these an in the money option has a time value component to it.
Right.
And if let's say let's look at it from the perspective of the option buyer. Okay. The option buyer now has an option, let's hypothetically say, that's in the money, which has an intrinsic value component to it. So if they exercise that option early, then yes, they've captured that intrinsic value component, but they've given up the time value
Time
component.
value.
So it almost always pays for an option buyer to sell the option rather than to exercise it and capture intrinsic value but lose time value. So
yeah, and so many
go ahead.
educators we talk to at Quasar talk about that they're all I've never seen an educator that talks about really taking over the shares. They're usually selling the options at the last second.
Well, yeah, I mean that's why there's this old myth about 90% of options going unexercised because 10% are exercised. Well, that's not true because about 55% of options are closed,
Right.
before expiration.
Yeah, that's one of those figures they give you that's an incorrect one. Yeah, that a lot of hype. Don't believe the hype.
Yeah, so yeah, definitely early exercise when you're doing covered calls can happen when there's an ex-dividend date, but even then it's very rare. And when it does happen, it happens the day prior to the ex date because some retail investor gets the big idea that they want to capture the dividend, not realizing that they can
That
make
they do
more money
capture the
selling
dividend.
the option, capturing that time value, and then buying the stock to capture the dividend. It's investor error almost all the time when early
Absolutely. But I wanted to ask because I didn't know on that case, if there would be a thing, and wouldn't you? It's not even an option, so doesn't matter.
Yeah, and if you want to, this is getting a little bit off topic, but since we're talking about it, if you have a stock that generates a dividend that you absolutely don't want to sell when you write a covered call, it's critical that you don't sell it because who knows, maybe it's in a non-sheltered account and it may create some negative capital gains issues, then you must circumvent that ex-dividend date.
Absolutely.
You cannot have an option in place because even though it's rare, it's more likely, when there's
you don't want to put yourself. Why would you put yourself in the situation if the whole goal is to avoid capital gains taxes for certain reasons or things? Then you don't even put yourself in the position where that can happen. That's
Right.
why I like your strategy. You take it out of play.
Yeah. Okay. So, I mean, that pretty much covers the topic. Now, again, I want to thank you because you gave me the idea of Ibit, and I'm probably going to use it all the time now.
I love it. Well, you'll have to keep us updated. Let us know how it's going. I am going to enter one on Tuesday for next week. I probably will be using the same strikes. I'll check in with you on Tuesday before I do it. But the markets are closed Monday. For those that don't know, it is President's Day, so there will be no trading. We're off at Quasar, but I will do that on Tuesday and keep everybody updated. And I'm actually going to be doing a show where I'm going to do it keep everybody updated on what's going on with it on a weekly basis on Mondays when I change the weekly over. I'm going to let people know. So I'll keep you updated, Miss Dr. Ellman. I thank you so much for giving me the confidence to be able to do this, first of all, and then the tools and the right strategy to do it. And where I feel confident enough in the exit strategy is buying your book, that I know that I'll be able to mitigate it. Not only that, but I know how to reach you if I have emergencies.
Oh, yeah, absolutely. Be glad to
Well,
talk.
you have a fantastic Valentine's Day. I know you're off to Vegas with your lovely wife. Have a fantastic time, and we will see you on that back end.